Hello, I'm David Bannister. I'm the editor of Banking Technology magazine, and I'm at the Payments International show in London with Ruth Wandhofer, who is the Global Head of Regulatory and Market Strategy at Citi Trade and Treasury Solutions. So Ruth, you and I have been at this event over a number of years. A new name for it this year, Payments International. What's new, or is it the same old conversations?
Well, we did take great care to make sure it's not going to be the same old conversations, which also went hand in hand with changing a little bit the speaker composition. But I would say at the same time, over the last year alone, so many different things have happened. We had new entrants in the market, new technologies. We have much more of a usage of cryptocurrencies. We have the whole blockchain discussion. We have distributed ledger technology that could suddenly replace or enrich correspondent banking, or effectively potentially replace it. So I think we have a lot of new things that the banking industry in the payment space and the transaction banking space has to deal with. And this conference is a place to discuss and see how we can actually make use of some of the innovative efficiency, whilst at the same time still staying compliant with all the regulation that has been coming over the years.
It's interesting that over the last decade or so, or longer probably, it's been regulation. Drive towards SEPA. We've done SEPA now. We're moving on, but it's technology that suddenly shifted everything up a gear, with particularly on the blockchain side.
Yes. I mean, these are almost like left field experience, which in your traditional payments business as a bank, you're not sort of used to, and suddenly they appear. And I think over the last years, banks have done a lot in creating innovation labs and creating also much more funding into venture capital and new technology, seed technology. But I think now we're coming to a point where there is this question: should these technologies not only be marginal experiments on the side, but can they become more mainstream? And that's where even central banks like the Bank of England are actually effectively looking at: should we explore the idea of a digital sterling, or is this something that is much more of a dream at this stage? And I think the way banks stay relevant, and we discussed just in the last few panels, being relevant to the client, also still generating revenue. It's not about the commoditized payments necessarily. It's about the experience and all the services and data you deliver with it. And I think that's where new technologies could bring a lot of value to improve processes that are today very expensive, if you look at AML and all these compliance processes.
But there's an inherent irony in all of this, because we've spent all of this time with regulations, banks complaining about the tsunami of regulations, and now we've got this technology, but it's without a regulatory framework, and that's quite odd in its own. So I almost get the sense that banks are going to be asking for some regulation, if only to level the playing field.
I think that's exactly a good point you're making. We do see also lots of new providers offering payment services, or even investment lending services, new services where banks have been either not efficient enough to provide them, or where banks, because of regulation, have been constrained. For example, lending is a classical example, where all of these Basel rules are actually effectively reducing your ability to freely lend and to be much more focused on credit risk and what you can do with your balance sheet. Now, these new providers are in the market, and whilst many of them are not necessarily deposit takers, so they don't need a banking license, they're offering a number of bank services that are, we are in a way regulated for, because we're deposit takers. And if you combine those new players with the new technologies that they're employing, and the technologies running alongside and suddenly coming into the business model of new players, you do see an increasing marketplace of financial services that is potentially completely outside of the regulation. And I think, Ripple was a great example we had in the discussion today, which is bringing, as a technology and protocol, potentially amazing efficiencies to a process which today is a clunky correspondent banking process. But you could equally look at it with suspicion to say, well, I have liquidity providers in the middle who I don't really know who they are. I've got Bank A and Bank B, and the liquidity providers that actually move the funds do not necessarily know what the purpose of the payment is. So you have the old empty 202 cover message issues in a different color, so to speak. And I think we're not yet at a mature stage to really see what we can do with policymakers to enable the efficient use of new technology in a way that we're still compliant with regulations. Because I think, my observation was, in certain senses, regulation is almost defining how infrastructure should be set up. Yep. Central counterparty clearing for derivatives is a very classical example, where of course a Ripple would say you don't need a central counterparty because you don't need intermediaries. And I think that is in conflict with the existing regulatory regime.
So there's a danger of anarchy out on the edges there, but you're quite confident that the regulators like the Bank of England will step up to it.
I think we have to work through with them. There has to be almost a stakeholder group, because also banks would probably be interested to see what new technologies can deliver to improve their processes. Today we have lots of expensive processes. If we look at the AML, KYC compliance, all the documentation, and even though we're digitizing documents, it doesn't mean that the workload isn't there. So I think the question is, how can we automate the workload in a more broader sense with new technologies?
So all of a sudden payments is not the dull plumbing job that it was, it's quite exciting again.
Well, I think it's very exciting, because also if you look at the paradigm of centralized payment systems versus decentralized, you're suddenly questioning the whole architecture of what has been built over the last centuries. Particularly in light of that discussion, new topics emerging such as instant payments in Europe are of course still built on the old thinking. It's central banks, it's clearing systems providing the services of settling and clearing, it's guarantees, it's potential credit risk or pre-funding. And I would almost challenge that some of the thought process is not necessarily embedding the future, which is moving alongside and potentially taking a far broader step forward than the thought processes that are happening at that level.
Yeah, okay. So this time next year, will it be even more exciting, I guess? So I'll look forward to that.
I think we will have more new entrants potentially, and that will be an exciting conversation to have.
Excellent. Well, thank you very much, Ruth.
Thank you.
Cheers.